The tax cuts might be a welcome addition to the family budget, but on the downside they could put more pressure on inflation by injecting a huge amount of cash into the economy. That's something the Reserve Bank will be keeping in mind at tomorrow's board meeting on interest rates. But for hard-pressed consumers and investors facing the worst returns in decades, the tax cuts will at least provide some short-term relief.
It's been the financial year of living dangerously. The Australian share market finished 15.5% down over the past 12 months, the worst performance in 26 years, and bad news for super funds.
The acid test for many members will be whether their account balance actually increases.
No sure thing, considering fund returns are expected to range from -2 to -10%. Extra cash will come courtesy of tax cuts, an $8 billion injection amongst the biggest in 3 years. Access Economics says it's a lot of money.
About an extra 1% to the disposable incomes of Australians, or, if you like, it's the equivalent of about 3 interest rate rises being unwound all in one day.
And it comes on top of a private inflation survey from TD Securities, which shows surging rents and petrol prices caused inflation to accelerate in June to an annual rate of almost 5%. Adding tax cuts to the inflationary mix of petrol, food and rent prices doesn't scare everyone, because the surging costs are also crippling.
And in this sort of environment, people are going to be paying down their debts rather than spending it up at the department stores.
And that's what's worrying the industry that employs 1 in 5 Australians.
Things have tightened up considerably in the last 6 months. People are watching every dollar they spend.
The Reserve Bank Board meets to decide on interest rates tomorrow, and it's generally considered it will keep interest rates on hold because it has more time to observe the competing economic forces play out. Philip Lasker, ABC News.